If you own gold coins right now, you need to understand something that most people don't realize until it's too late. You've become a target, not in some conspiracy theory way, but in a very real, very documented pattern that's playing out across the country as we speak. And what I'm about to show you isn't speculation. It's happening right now, and the evidence is stacking up in ways that should concern anyone holding physical precious metals. Let me start with a question that might make you uncomfortable. When was the last time you thought about who knows you own gold? Your dealer knows. Your insurance company might know. If you've ever posted about it online, even casually, that information exists somewhere. And here's what most people don't realize. In times of economic stress, gold owners become visible targets for a very specific reason. You're holding the one asset that maintains value when everything else is falling apart. We're watching gold trade near all-time highs right now, breaking through resistance levels that analysts thought would hold for years. Major brokerages are openly discussing targets that seemed impossible just months ago. Goldman Sachs, Citigroup, State Street, they're all projecting levels that would have gotten you laughed out of the room 2 years ago. But here's what they're not telling you in those glossy reports. When gold moves like this, when it becomes the story everyone's talking about, something else happens in parallel. Crime patterns shift, home invasions targeting precious metals owners spike. And the data on this is absolutely chilling. Let me take you back to a pattern we saw play out before. During the last major gold rally, law enforcement agencies across multiple states started noticing something strange. Burglaries weren't random anymore. They were targeted. Specific homes, specific safes. The thieves knew exactly what they were looking for and exactly where to find it. In one case in California, a retired couple had been collecting gold coins for decades. Small purchases, nothing flashy, building wealth quietly the way you're supposed to. Someone knew. The break-in happened during a 2-hour window when they were at their grandson's baseball game. The thieves went straight to the safe, knew the type, had the tools ready. 40 years of careful accumulation, gone in minutes. Now, before you think this is just about home security, let me show you the bigger picture. Because what's happening right now is different. It's more sophisticated, and it's directly connected to how visible gold ownership has become in the digital age. Every online purchase leaves a trail. Every dealer transaction gets reported over certain thresholds. Every social media post about your collection, every photo of your stack, every casual mention in an online forum, it all creates a digital footprint. And there are people who specialize in connecting those dots. I want you to think about something for a second. Check the description below this video. I've put together a free guide that shows the specific strategies thousands of American retirees are using right now to protect their hard-earned wealth, not just from theft, but from all the risks we're going to talk about today. It's free, it's comprehensive, and it might be the most important thing you read this year. Here's what's really happening in the gold market right now, and why it's creating this target-rich environment. Central banks are accumulating at a pace we haven't seen since the 1970s. China, Russia, India, Turkey, Poland, they're buying thousands of tons. The World Gold Council's data shows central bank purchases hit levels that broke records that stood for decades. But here's the critical part. They're not doing this because gold is a good investment. They're doing this because they're preparing for something. They're diversifying away from dollar-denominated assets in a coordinated way that tells you everything you need to know about what major governments expect to happen next. When central banks move like this, when they're willing to pay premium prices to accumulate physical metal, they're sending a signal. They see the same cracks in the financial system that independent analysts have been warning about. The debt levels that can't be sustained, the currency debasement that's accelerating, the geopolitical realignments that are fundamentally changing how global trade works. And they're positioning for a world where gold isn't just a hedge, it's a necessity. But here's where it gets personal for you as a gold coin owner. As this institutional demand drives prices higher, as gold becomes more valuable and more visible in the public consciousness, you're sitting on an asset that's becoming increasingly attractive to criminals. And I'm not talking about random opportunistic theft. I'm talking about organized operations that specifically target precious metals holders. Let me tell you about a pattern that emerged in Texas. A series of home invasions over an 18-month period, all targeting known gold buyers. The connection? They'd all used the same online dealer. Somehow, customer data had been compromised. not through a massive hack that made headlines, but through a smaller breach that flew under the radar. The thieves had names, addresses, and approximate holdings. They hit homes methodically, professionally. Some victims lost 6 figures worth of gold in minutes. The psychological trauma of knowing someone targeted you specifically, knew your patterns, knew what you had, that stays with people forever. Now multiply that pattern across the country, because it's not isolated. FBI data shows a clear correlation between gold price spikes and targeted thefts of precious metals. When gold rallies, when it's in the news, when people are talking about it, crime follows. It's predictable. It's documented. And right now, with gold where it is, with the momentum building, we're entering a high-risk period. But the threat isn't just from criminals. Let me show you something that most gold owners never consider until it's too late: legal seizure. Now, before you dismiss this as paranoid thinking, let me give you the historical precedent. Executive Order 6102, 1933. The government literally made private gold ownership illegal and forced citizens to sell their gold to the Federal Reserve at a fixed price. Then, after collecting it all, they revalued gold higher, effectively confiscating wealth from the population. Could it happen again? Most people say no. But those same people didn't think we'd see negative interest rates, unlimited quantitative easing, or governments openly discussing central bank digital currencies that could track and control every transaction you make. Here's what you need to understand about the current environment. We're in uncharted territory. The debt to GDP ratios in major economies are at levels that historically have only been seen during world wars. The Federal Reserve's balance sheet expanded in ways that would have been considered impossible a decade ago. The political pressure to find revenue, to control capital flows, to prevent wealth from escaping the system, it's building. And gold, physical gold, that you can hold and hide and move, represents exactly the kind of asset that governments get nervous about when they're desperate. Think about what happened in India: demonetization. Overnight, they invalidated large denomination currency notes. Chaos. People's savings, held in cash, suddenly worthless unless they could prove where it came from and deposit it into the banking system. Now imagine a similar scenario with gold: a requirement to register holdings, a tax on possession, a forced buyback program. Sound far-fetched? It's happened before. It's happening in various forms around the world right now. And the infrastructure to make it happen, the digital tracking systems, the reporting requirements, they're already in place. This is why smart gold owners are thinking beyond just buying and holding coins in a safe. They're thinking about structure, about privacy, about jurisdictional diversification, about the difference between owning gold that's registered and tracked versus owning gold that's held in ways that provide real protection. Let me paint you a picture of what's coming in the financial system, because this is the context that makes gold ownership both essential and risky. We're watching the dollar's role as the global reserve currency get challenged in real time. The BRICS nations aren't just talking about alternatives anymore. They're building them. Trade settlements in yuan, oil transactions bypassing the dollar, gold-backed trade mechanisms. This isn't theory. This is happening right now, and it's accelerating. When the dollar loses its reserve status, even partially, the implications are staggering. The ability of the United States to run massive deficits, to print currency without immediate inflation consequences, that goes away. The adjustment process, the repricing of assets, the potential for currency crisis, it's the kind of scenario where gold doesn't just preserve wealth, it multiplies it. But it's also the kind of scenario where governments get aggressive about controlling capital and tracking assets. You're caught in the middle of this. You did the smart thing. You bought gold. You protected yourself against currency debasement and financial system risk. But now you're holding an asset that makes you visible, that makes you a target, both from criminals who want to steal it and potentially from authorities who might want to control it. So what do? How do you protect yourself? This is where most people make critical mistakes. They think a good safe is enough. They think keeping quiet is enough. They think insurance covers them. And they're wrong on all counts. Let me tell you about a couple in Arizona. Retired, comfortable, smart people who'd accumulated a significant gold position over 20 years. They had a quality safe, bolted down, hidden behind a false wall. They had insurance, or so they thought. They never talked about their gold holdings. They did everything the conventional wisdom says to do. Then they got hit. The thieves came prepared. They knew about the safe. They had the equipment to deal with it. They took everything. When the couple filed their insurance claim, they discovered the hard truth. Their homeowner's policy had a precious metals limit of $5,000. Their actual loss was over $300,000. The insurance company paid the limit and walked away. The couple lost their retirement security in one night. This is the reality that most gold coin owners don't understand until it's too late. Standard insurance doesn't cover you. Standard security doesn't protect you. And standard storage methods make you vulnerable in ways you haven't considered. Now, if you're sitting on $100,000 or more in retirement accounts, let me share something that might change how you think about gold ownership entirely. There's a structure that solves multiple problems at once. It's called a gold IRA, and it's not what most people think. This isn't about buying gold coins and putting them in your safe. This is about getting physical gold into a retirement account structure that provides legal protection, professional storage, and tax advantages. The guide I mentioned earlier covers exactly how this works, how you can move funds from existing retirement accounts into physical gold without tax penalties, and how the storage and security work. It's worth understanding, especially if you're concerned about the risks we're discussing today. But let me get back to the immediate threat picture, because there's more you need to know. The sophistication of precious metals theft has evolved dramatically. We're not talking about smash and grab anymore. We're talking about operations that use social engineering, that monitor targets for weeks, that coordinate timing with precision. In one case in Florida, thieves posed as utility workers to gain access to a neighborhood, mapped out which homes had safes based on electrical usage patterns, and then hit 3 houses in one night. They knew the owners' schedules. They knew the response times for local police. They knew exactly what they were after. The common thread in almost every case, the victims had left some kind of trail, an online purchase that got logged, a dealer visit that got noticed, a casual conversation that got overheard, a social media post that seemed harmless. In the digital age, privacy is almost impossible, and gold ownership is increasingly visible. But here's what really keeps me up at night, and what should concern you. The economic pressure building in the system right now is creating desperation. We're seeing it in crime statistics. We're seeing it in the political rhetoric around wealth taxes and asset reporting requirements. We're seeing it in the way governments are expanding financial surveillance under the guise of fighting money laundering and tax evasion. And gold owners are right in the crosshairs of all of it. Think about the reporting requirements that already exist. Dealers have to report transactions over $10,000. Multiple smaller transactions that appear structured to avoid reporting, that gets flagged too. Your bank reports large cash deposits. Your insurance company reports valuable items. The IRS gets copies of all of it. The idea that you can quietly accumulate gold and stay off the radar, that's largely a myth at this point. So you're faced with a choice. Do you sell your gold and eliminate the risk? Absolutely not. That's exactly the wrong move. Gold is doing what it's supposed to do. It's protecting you against the very real risks in the financial system. The debt crisis isn't going away. The currency debasement isn't stopping. The geopolitical tensions aren't resolving. If anything, they're all accelerating. You need gold now more than ever, but you need to own it in a way that actually protects you. Let me walk you through what the smart money is doing, because there's a pattern here that's instructive. The ultra-wealthy, the people with real money to protect, they're not keeping gold coins in safes at home. They're using structures. They're using jurisdictional diversification. They're using professional vault storage in multiple locations. They're using entities that provide legal separation between them and the assets. They're thinking about this like the serious wealth protection strategy it is, not like a hobby. And here's the critical insight. The protection isn't just about preventing theft. It's about preventing seizure. It's about maintaining access in scenarios where capital controls get implemented. It's about having options when the financial system gets stressed in ways that make your domestic holdings vulnerable. Look at what happened in Cyprus. Bank deposits over a certain threshold got confiscated to bail out the banking system. People woke up one morning and their money was gone. Legal, approved by courts, done. Now imagine a similar scenario where gold holdings get targeted, a special tax, a forced sale requirement, a registration mandate with penalties for non-compliance. The mechanisms exist, the precedent exists, and the financial pressure that would make governments consider such measures is building every day. This is why the structure of how you own gold matters as much as owning it. A gold IRA, for example, provides legal protections that personal ownership doesn't. It's held in a qualified custodian. It's in a professional vault. It's protected by retirement account laws that make it much harder for creditors or government seizure. It's not perfect, nothing is, but it's a layer of protection that most gold coin owners don't have. But even beyond IRAs, there are strategies for holding physical gold that minimize your visibility and maximize your protection. Allocated storage in private vaults, jurisdictional diversification where you hold gold in multiple countries, using entities for ownership that provide legal separation. These aren't strategies for criminals trying to hide assets. These are legitimate wealth protection strategies that wealthy families have used for generations. The problem is, most regular gold owners don't know these strategies exist. They buy coins from a dealer, put them in a safe, and think they're protected. And they're not. They're exposed, they're visible, they're vulnerable. And as gold continues to rally, as the economic situation continues to deteriorate, that vulnerability is only going to increase. Let me give you a specific example of how this plays out. There's a pattern in every major financial crisis. First, there's denial. Everything's fine. The problems are temporary. Then there's panic. Suddenly, everyone realizes the problems are real and serious. Then there's the scramble. Everyone tries to protect themselves at once. And then there's the crackdown. Governments implement emergency measures to control capital, control assets, control the population's ability to protect their wealth. We saw it in the Great Depression. We saw it in the 2008 financial crisis, with the speed at which bailouts and new regulations got implemented. We're seeing it now with how quickly governments move to implement unprecedented monetary and fiscal policies. And in every case, the people who protected themselves early, who had their structures in place before the crisis hit, they were the ones who preserved their wealth. The people who waited, who thought they had time, who didn't take the threat seriously, they got caught. Right now, we're in the early stages of this cycle. Gold is rallying because smart money sees what's coming. Central banks are accumulating because they see what's coming. But the general public is still largely asleep. They're still trusting that the system will hold together. They're still believing that their dollars in the bank are safe. They're still thinking that their government will protect them. And they're going to be shocked when reality hits. If you own gold coins, you're ahead of the curve. You saw the risk, you took action. But now you need to take the next step. You need to protect what you've accumulated. You need to think about structure. You need to think about security beyond just a safe. You need to think about legal protection. You need to think about jurisdictional diversification. You need to think about this like the serious wealth protection strategy it is. And you need to think about timing. Because here's what history shows us. The window for taking protective action closes fast. Once a crisis hits, once governments start implementing emergency measures, once capital controls get discussed openly, it's too late. The structures you should have put in place, you can't implement them anymore. The moves you should have made, the regulations prevent them. The protection you needed, it's no longer available. This is the urgency that most people don't feel until it's too late. They think they have time. They think they'll see it coming. They think they'll be able to react. And they're wrong. The speed at which things change in a real crisis, it's shocking. We saw it in 2008. We saw it in 2020. We're going to see it again, and probably soon. So what specifically should you do? First, understand your current exposure. How visible is your gold ownership? Who knows you have it? How is it stored? What legal protections do you have? What insurance coverage do you actually have? Not what you think you have. Get clear on where you stand right now. Second, evaluate your storage situation. Is your gold in a safe at home? That's the highest risk scenario. You're vulnerable to theft. You're vulnerable to home invasion. You're vulnerable to fire, flood, natural disaster, and you have no legal protection if something happens. Professional vault storage, whether through an IRA structure or private allocated storage, eliminates most of these risks. Third, think about diversification. Not just diversification of assets, but diversification of jurisdiction. Holding all your gold in one country under one legal system, that's concentration risk. If that jurisdiction implements capital controls, if they change the rules, if they decide to tax or seize precious metals, you're stuck. Having gold in multiple jurisdictions gives you options. Fourth, consider the legal structure. Are you holding gold personally or through an entity that provides protection? An IRA provides certain protections. An LLC can provide others. A trust can provide different benefits. The right structure depends on your specific situation, but holding everything personally in your own name is usually the highest risk approach. Fifth, think about documentation and proof. If something happens, if you need to make an insurance claim, if you need to prove ownership, if you need to demonstrate the source of funds, do you have the documentation? Receipts, certificates, appraisals, photographs, all of it matters. Most people don't think about this until they need it, and then it's too late. And sixth, have a plan. What happens if there's a home invasion? What happens if the government implements new reporting requirements? What happens if gold gets restricted or taxed? What happens if you need to move or liquidate quickly? Having a plan before you need it is the difference between protecting your wealth and losing it. Now, I mentioned earlier that if you've watched this far, you're clearly serious about protecting your wealth. The guide in the description goes deeper into all of these strategies. And if you're an American retiree with at least $100,000 in any retirement account, you qualify for an exclusive one-on-one educational web conference. No obligation, no sales pressure, just education on how to structure your gold holdings for maximum protection. It's free for people who mention they watched this video. That's the kind of personalized guidance that can make the difference between being protected and being exposed. Let me bring this full circle. You own gold coins because you're smart enough to see the risks in the financial system. You understand that currency debasement is real. You understand that debt levels are unsustainable. You understand that the system is fragile, but now you need to be equally smart about protecting what you've accumulated, because owning gold makes you a target, and the risks are only increasing as gold rallies and economic pressure builds. The criminals who target precious metals owners, they're getting more sophisticated. The governments that might implement capital controls or asset seizures, they're getting more desperate. The financial system that you're protecting yourself against, it's getting more unstable. All of these trends are accelerating, and they're converging in a way that makes this moment critical. You can't control what the government does. You can't control what happens in the financial system. You can't control whether criminals target precious metals owners, but you can control how you structure your gold holdings. You can control how visible you are. You can control what legal protections you have in place. You can control whether you're prepared for the scenarios that are becoming increasingly likely. The difference between people who preserve their wealth through a crisis and people who lose everything often comes down to preparation. Not luck, not timing, preparation. Having the right structures in place before you need them. Understanding the risks before they materialize. Taking action before the window closes. Right now, you still have that window. You can still implement protective structures. You can still diversify jurisdictions. You can still move gold into protected accounts. You can still reduce your visibility. You can still get proper insurance. You can still build the legal protections you need. But that window is closing. Every day that gold rallies, every day that economic pressure builds, every day that governments get more desperate for revenue and control, that window gets smaller. The question is whether you're going to act while you still can, or whether you're going to wait until it's too late. Because I can tell you from studying history, from watching how these situations play out, the people who wait always regret it. They always wish they'd taken action sooner. They always underestimate how fast things can change, and they always overestimate how much time they have. You own gold because you saw the risk. Now protect that gold with the same foresight. Structure it properly, store it securely, diversify it strategically, document it thoroughly, and do it now while you still have options. Because the time to prepare for a crisis is before it hits, not during it. And if you're paying attention to what's happening in the gold market, what's happening with central banks, what's happening in the geopolitical landscape, what's happening with debt levels and currency debasement, you know that crisis is coming. The only question is whether you'll be ready when it does.